What's going on, everybody? Good morning, good evening, wherever you are. Hope you're having a good one so far. Welcome into the live stream. If you are here to find out where this market is heading to, we got you. Let's run through the important parts of this live stream today. And I just realized that I forgot to post the link on our Discord. Let me just do that real quick. And all right, let's get this started. So going on from the previous sessions and what we have been covering, pretty much hit this pattern on the nail, right? I mean, it can't get better than this. We spoke about this big wave up, the correction down, the buy up here, and we were looking for a pullback back into the 50% retracement. We got that perfectly, and our shorts were layered right here. The market squeezed a little bit more and then eventually puked because of CPI, which came in a little hotter than expected. And then now the cooling of NVDA and semiconductors over the past session. So that's been a lot of what has been going on for the past two sessions. If you can see, Nasdaq has been having a very tough time here. And the first real indication as to why the indices were dropping lower, or the indication as to when SPX was drawing lower, was when Nasdaq made a lower high here, forcing to make a lower high, lower low situation, which is now forming into a downtrend. So we now do have a confirmed downtrend, which we should see a pullback up into against in the next 1 to 2 sessions. Now, the important thing here is, how do you play this risk management style? How do you make sure that you don't mess this up and not overly try to time this? As you can see, SPX here is still generally in a very tight formation. This can still be considered a pretty long bull flag in some degree on the 4 hours. So we still have to, give this some non-biasness and make sure that we keep our biases in check, right? So when we're talking about the indices here, we have to first understand that semis make up a big part of the Nasdaq, a part of the technology stocks that we've been looking at. And that's what's driving a lot of this action downward, which is playing out in SPX as well. Now, the other few things that are happening in other parts of the market is small mid caps have pretty much been pretty solid over the past 1 to 2 trading sessions. In fact, IWM hasn't really dipped that much compared to the rest of its counterparts. And so, hey, good morning, man. Jason, what's up? How are you doing? And when we talk about IWM here in terms of relative strength, we can see that this pocket of the market has not dropped severely yet. Doesn't mean that it can't drop. I'm just saying that it has dropped less than the counterparts, right? On top of that, bonds still continue to look weak here, which means that the bond market doesn't believe that the Fed is ready to cut interest rates yet, because they are continuing the bond selling program, which is kind of signaling that the Fed may keep rates at where they are. Or if we continue to see bonds sell off further downward, that means that the bond market is going to be pricing in the possibility that the Fed will actually instead hike interest rates, right, at some point. So if the bleed in the bond market starts to get worse, it's going to tell us about what the market is dictating in terms of the Fed's balance sheet. Are we looking for the Fed to buy some bonds? Are we looking for the Fed to sell some bonds? And right now, the bond market is pricing in either continued stay situation with the rates, or hike situation. Okay, we went from last month, we went from an all-time high of 8 to 9 rate cuts in 2024, right? This was what the market expectation was just last month, okay? And today, the rate cut expectations are 3 to 4 in this year again, okay? So this is how quickly the market perception can change, okay, very, very quickly, right? And as you guys know, we have been in that extreme greed kind of pocket of the market for a while. So this natural correction here is very much needed in order for this market to continue to go further higher. Hey, what's up, Jex 100? Nasdaq prediction. So yeah, we're going through that right now. So just listen in, and I'm pretty much going to be giving you the roadmap as to what I'm looking at, and also how to play the surrounding thematic opportunities. Okay, so have some patience with me while I explain everything just chronologically. I like to go in a certain way. So having bonds discussed, the next thing we want to see is the VIX here, right? And so the past few sessions I had kind of made you guys aware the VIX is actually kind of trending upwards here a little bit, right? And we had that one-day pop into the $18 level, right? Which we kind of saw it as a offshoot of gamma explosion in the market. Unclenching of gamma during OPEX also resulted to some of this. So that is not really a very strong signal just yet. But the VIX moving up here above 17 would be first warning shot as with SPX moving further down. Okay, we still need confirmation. The dollar index is still kind of hanging out here at 104. Hasn't been able to breach this 104.60 level and move higher. And at the same time, the bond market has been signaling, you know, with its 10-year yields, you can see the 10-year yields here, just holding steady here. So with these two macro signals here, the current signal gets a bit messy, because these two are not really showing something that will tell us that the market's ready to go further down. Okay, that's the thing here. So you have to be really, really careful, because honestly, the thing is, last Friday we took short positions on the Discord together, right? And it's playing out. Obviously, we took some profits on those already. In fact, I have majority of my positions taken profits already. Like you can see here, just on Friday is where I had signaled the short hedge, right? Temporary hedge, because this was a bet on OPEX for protection against two other positions that I had, which I closed ARC out. Half of it out for a profit and half of it out for a loss. Ended up just breaking even on the ARC position, but I still have an IWM long-term position now. And we decided to go for some 223 SPX 4925 puts, right? And these just, you know, on Tuesday opened up plus 25-30%, which I closed 3 of them out at roughly about 22% ultimately. And then I closed another 2 at 45%. So I trimmed both of these, and now I only have one runner of these positions. Remember, I'm starting off with considerably less capital at the beginning of the year, so my risk allocation is a max 5%. And I went ahead and put all 5% into a hedge for Friday. So that gave me a little bit of energized returns. As you can see, the P&L for the week here is currently sitting at about $1,400 to start off the week, okay? And in terms of the year, adding on this week's gains, let's say I close out at where I'm at, I'll probably be at around maybe close to 6,000 or 7,000. So I haven't really been trading that much. I haven't been putting much risk on, okay? I've just been keeping it chill, trying to get my bearings, trying to, you know, just inch into these trade opportunities and just kind of get that rolling in a more risk defined way. Remember, your job as a trader is not to predict where the market is going. Like I see so many people get this wrong that it's unbelievable, right? Your job is to be prepared for every single outcome, and your job is to be prepared to take risk when it matters. You're not trading your time for capital here. You're trading your time for freedom. Remember that. So don't go and try to guess the market's going further down or further up. Your job is just to come up with all the different scenarios and be prepared to play all of them. Okay, you need to have a playbook. All right. So having a look at SPX here now, you can see that on the 4 hourly, we are pretty much on the way to retest these lows here, if that actually happens, which in my opinion, we probably see a little bit of a pullback first before that happens. But eventually, at some point in time, we're going to come back and retest these lows at 49.20. That's the reason why I took 49.25 puts, right? And the Nasdaq here also looks kind of weak. If today Nasdaq's not able to pull back and retest the 17,600 level, which is like right here, it's a strong level here for another rejection, then it might fall directly from here. So that's really two ways this goes. Either it bounces here to the upside and then crashes down, or it crashes down further. Now, do I want to play the upside here? Absolutely not. right? The risk reward ratio is too slim. There's not a good opportunity here for us to take any desirable profit just playing this small wave up, even if it's an intraday play, because it's just too risky, right? In the bearish market, you don't want to play a bullish pop just for the reason because you want to take a contrarian bet. It's going to always play out poorly, and that's just not the vibes we're looking for right now, right? We're looking for a vibes where we get a little bit of a pullback, we have that upward explosive movement, maybe some kind of a clenching movement, and then after which that happens, we can go continue shorting the market, right? So right now, your job is not to actually react to any of the price action that's on with this market right now. The main pivot point is exactly where we are, right? 17.478 roughly, whatever. This is just the fib level that's here. This level holds as a key level, then we get a move to the upside, retest 17,600, and if we fail 17,600, then that sends us back down into 23.6 extension or 38.2 extension, which is 17.3345, 17.263, and then eventually down into 17.130 if the market gets extremely corrective for the short term, okay? And here is where we have a major liquidity zone where we can snap up some liquidity. So that will be an area where we'll be looking for some demand to come in. Okay, on SPX, the story is not very different, except for it's a little bit, it has a little bit more room, right? So once again, the move to the upside here will be very muted up back to 5,000 because 5,000 is a magnet level in terms of psychological level, in terms of gamma level for market dealers, right? And after which we would see the extension back down to 38.2 and then further down to 48.50, and then if really gets a full corrective wave, we get 47, let's just say 4,800, right? So that's your key levels on the downside. If the market decides to bounce very strongly here, and it goes, this is the reason why you don't want to play the upside neither, is because you don't know if it will actually go for that kind of a move, right? But if it does, then it's likely to break this level, right? It's likely to break this level. So that's how I look at this right now. If the market moves further higher, and breaks the 5,000 level and continues going higher, then it breaks 50.46 or whatever this all-time high level is. If not, it stays muted and it's going to be a bit weak and then continues its downward descent here. Okay, so that's all you need to know in the macro stand front. Remember that the yields and the dollar index are not supporting a move to the further downside right now, but it doesn't mean that that can't change. Okay, so we'll be watching that closely. That'll be something that we'll be looking at in the next two sessions. And Bitcoin, our favorite risk barometer, has been seeing some buying, but now consolidating in a bull flag. So risk is still on as far as I'm concerned, right? Okay, now individual opportunities. One thing that you guys need to understand is this market is not going anywhere. In other words, SPY and Nasdaq is not going anywhere without Apple and Microsoft losing these key levels. Okay, Microsoft has to lose this key level at 397, and Apple has to lose its key level at, what is this level? 179 to 180. Okay, they both have to lose these levels in order for us to see further downside on the indices. So when both of these breach, that's when I'll be comfortable going fully short. Okay, but if that doesn't breach, then there's no reason to go short just yet, right? Remember, the stocks like Google is still hovering around this level here, and you know this pivot point at 138.50 is a very key pivot point for Google to hang on to. Even the same story with Meta, but has more room down, right? And even with Netflix, it's kind of trying to move further down. So having a look at all of those sympathies is a very important thing. If Apple moves further down, Microsoft moves further down, then Nasdaq and the rest of the market is likely to get weak. Okay. Now, I hope that helped you in kind of breaking things down, Jax 100. I don't know if I answered your question, but if I did, let me know. If I didn't, let me know either way, right? Now, the next one, AMD. We saw this last week, and it was looking like a nice pennant, and it had a fake breakdown, then it had a fake break up, two rejections out here, and that was a very bearish signal. We spoke about that, I think, no, we didn't because it was too soon, right? But I spoke about this on the Discord, posting this opportunity. Unfortunately, what happened is it gapped down right when the market opened, and it moved so quickly that I didn't even catch it, okay? Now with AMD, this is a really interesting opportunity here because quite honestly, you know, just taking this as your retracement levels here down to this wave, you can see that if we actually lose this 162 level and start really heading further down here, it could really end up with a 23.6 extension at 157, and then 154, and then 148. Okay, this can actually come down pretty quickly if it's aggressive. But just looking at where we are in terms of market internals for the while in terms of semiconductors, you can see that SMH closed the day with a little bit of buyback from bulls. Okay, but it's opening the day once again weak again, right? It's going to open the day potentially breaching the lows of yesterday. So if semis continue to be weak and bleed, then that's going to set the tone for a lot of these other semiconductor stocks. So as a whole indices, and then as a whole ETF, and then as for the individual stocks as well. One stock that is interestingly, surprisingly looking like it's bullish in a bearish opportunity market is Robinhood. Now, I'm not really sure what's going on here, but this thing has been moving further higher in the past consecutive sessions. And obviously, I'm not going to take a trade here, but I just find this interesting that a stock like this is actually doing pretty decent against market conditions. Maybe the stock is so oversold that now all that is left is demand, and that might be one of the things that might be considered. Now, Tesla with the big explosive move to hit this, to form the upper trend line here now. And the bottom has also these lower two trend lines, which could turn into a huge megaphone pattern. Okay, that would also set us up into a wave further down here. So if Tesla breaks 189.20, I will be initiating a short position all the way down for some 180 puts, hoping that we'll touch 182, and by 182 I'll be out. I'll be out of the position fully at 182. Okay, so the path and plan here for Tesla is a break here will give us the opportunity to short down into 182. Okay, and it has to break with high volume momentum. If not, the trade doesn't get triggered. Okay, if Tesla decides to buy up strongly, then the rejection level is going to be 194.40. Okay, and then that sets up the rejection here potentially, and then the wave down. So this can go either way. Be prepared to play both ways. Remember, the upside is sucks, so don't take the upside trade. Wait for the rejection of the upside to take the downside trade. That's probably the better structure to play. That's the better risk-reward ratio. That's the better odds to play. That goes in line with our market analysis, right, if the market continues to melt down. Okay, so just remember, it's multiple levels of confluence. It's multiple levels of analysis. It's not just so simple where you just look at one chart and then you have your answer. Okay, if you're here and you're listening to my voice right now, I would love to hear from you. Who's here right now? I actually kind of want to know who's here. Jason, Jax 100, you guys here? Okay, next up, there is Chewy. This one is interesting too, right? Just looking at the basis of where this is in terms of the head and shoulder pattern, and then the neckline here being breached. I think that today, this has the capability to break further down, okay? So this 1647 level, 1650 level is a potential level for Chewy to see some downside movement, but I'm super wary about this also having a short squeeze, okay? As I had mentioned prior, or I don't know if I mentioned this on the live stream yet, and you can pull this information up. If you look up Chewy on Finviz, for example, you can see that the current short float is about 17%. That means about 2 short ratio for every 1 buy. There's two shorts currently. Okay, that could set up a short squeeze. Okay, and if that goes out of control, then we get a gamma squeeze, and this thing could actually really pop if that happened, right? So I'm really gonna carefully play this one, because I think here the smart play is a volatility play instead of playing a directional play. And I think the best way to do that is to play a short-term straddle, right? A straddle, or if you want to do a cheaper version of a straddle, you can do a strangle, right? So 2 out-the-money calls or puts, that means 1 out-the-money call, 1 out-the-money put, and whichever one that, hits, right? So essentially you're straddling your position or strangling your position. Coinbase, this one, actually not really much to talk about right now. Amazon to FCX to Airbnb as well. Walmart has a stock split coming up. Just note that. Roku came, you see how the weird ass megaphone pattern played out here? Top rejection, top rejection, top rejection, bottom support, and now boom, 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 coming back down here really quickly, all the way down from 95 to 65 pretty much, in a matter of literally 2 days, right? So this will be something that I'll be keeping a watch for a potential bounce to the upside once it plays out. And NVDA, which has been on a extreme tear, and people calling for $1,000 calls where the market's been pushing this thing further up, now is finally seeing some signs of breaking down. And personally, I think this needs some structure here. This is lacking any structure whatsoever. So for me, the bar is pretty low for NVIDIA to get into a short position. Like I need it to really break down, and start trading below 663 for me to initiate a short position here. And I say this because obviously I missed this entire movement, right? I missed the entire movement. I have no interest in playing this short position. I have had no interest in playing this short position since this move happened. And for me, I want to see more downside price action before I, kind of work that out. Now another one is Moderna, and this has earnings coming up on tomorrow. Oh, by the way, NVIDIA's earnings comes out today, I believe, post-market. Yeah, it's today. Today, post-market, NVIDIA comes out. Market's been waiting. Market is definitely waiting on NVIDIA earnings as well. So this is one of the reasons why I don't want to hold any short positions at the end of the day today. Because NVIDIA now has a market cap of what? Almost $1.72 trillion, guys. Okay, so best bet, if NVIDIA blows its earnings out of the water, it's gonna send this market ripping. Okay, Nasdaq will start ripping again. Everything will start going again. So today is the day to go short was Friday. Today is more of the day to kind of clean up your shorts, exit your shorts, and then wait for the retest. Wait for another round of buying, or wait for another round of demand, so that you can pile in with some more supply. Okay, that's the plan right now. The plan is to stay short systematically, but remember to use your risk management to your advantage, and don't take short positions here. Here is the absolute wrong position to take shorts. To even play this small move down, if you would tell yourself, oh yeah, I can just take a small position here and play this move to the downside intraday, you're gonna get yourself into a dilemma. Because what if the market squeezes during intraday, right? Then you close out your shorts at a loss. So then you start getting into all kinds of psychological problems. Like, oh man, why did I do that? I feel so dumb. I shouldn't have done that. And you're just burning away capital for no reason. Remember, the same way that we use consistency to build a portfolio, that same consistency can be your biggest problem. Okay? Because if you keep chipping away $200, $300, $200, $300 at options positions, and you're like, yeah, maybe this one will hit, maybe this one will hit, maybe this one will hit. And I'm pretty sure that some of you are guilty of doing this, because I used to do that, right? How many of you do this till today, right? You're like, oh, I'll just put 300 in here. It's like a gamble. If it works out, it works out, right? How many of y'all still do that? If you keep doing that, your portfolio is going to, constantly have that. The portfolio won't have a cushion that's built, right? You won't have a cushion for when you actually need to take some risk, okay? So a lot of people end up wasting a lot of the ammo, and then when the time comes that they have to make a decision and they can actually put on risk because the market's melting down, they've run out of capital by then. Okay, so I don't want you guys to be put in that position. Hang off. This next 1-2 days, don't trade. Just hang on, right? Wait for setups to form again. Right now you can see the setups are formed, but they haven't dictated direction yet. Apple's the same thing, AMD's the same thing. Everything's sitting at key pivots. Look at this. Even Tesla's sitting at a key pivot, right? Intel's sitting at a key pivot. Chewy's sitting at a key pivot. Coinbase not so much. Amazon kind of. So you have a whole bunch of things that are sitting at key pivots. You want to really just wait this out. Okay, the right answer right now is wait it out for the right moment, and when NVIDIA earnings drops and the market has decided to pick a direction, or you get a burst to the upside and you see a rejection, you enter short. If the market goes long here and decides to rip to the upside, then you have to wait till you break all-time highs to play it, okay? So either way, this is not a good spot to take on risk. I would avoid it and wait for a better setups to form. Okay, that's all I have for you guys today. Good advice. Thank you, Monique. Appreciate it. And I love hearing from you guys. So in the next couple of weeks, I'm going to be having some really nice announcements to make. I'm really, really excited about them. I think this is the first time I'm going to be announcing this, but we are going to be going through a huge rebranding in the next couple of months. And I'm going to take you guys along this journey with me because I think the best things in life are shared, and I think the journey of rebuilding EGA in terms of its vision, I want to go sharper and deeper this year. You know, we really want to help people on every level here. So a lot of things are going to be changing. Live streams will always be here, don't worry about that. But we're really going to be starting to kick this off into high gear in the next 1 month or two, and I can't wait to take you guys with me. So having said that, I wish you guys the best trading session. I'm going to hop on live trading here in a second, or rather be in the Discord or on the Discord to answer questions if you have any. Remember, 14 days free signups are still available. You can reach out to me on Instagram if you need any questions answered. Always here for you guys. And I'll see you guys back on Monday again for another live stream. If you can, right before you leave, smash that like button. That would do us a lot of help. And apart from that, I hope that y'all have a good one. If you have any questions, post them down below right now. I'll give you guys like a minute or two. Just post any of your questions, any charts that you want me to go through. I can do them right now. And yeah, I'll wait here for like a minute. I'll be here for it. You'll be here for the rebrand? Is that what you mean, Jason? Well, thank you, man. Thanks for the support. I really appreciate it. Also, you know, if you guys would give me some feedback about what you want to see in the live streams also, right? We have the pre-market updates, but I'm willing to do more if there is more demand for certain things. So if you have any things that you have a burning desire to learn, let us know. See you in the Discord. For sure, man. All right, well, I don't see any questions. I'm gonna head out of here. I hope you guys have a good session. Take care, and back on Monday for another live stream. I hope you enjoyed this one. Peace out, guys.